Recession fears in the United States are reflecting in Wall Street's meltdown since last week, with the sell-off extending to Asian markets. Now, Wall Street saw a deep sell-off overnight, marking its worst drop since September of 2022, with over $4 trillion erased in value. The sell-off was fueled by investor fears over mounting trade tensions and recession risks. This comes as President Donald Trump refused to rule out an economic downturn. The volatility index surged to its highest level since December of 2023, reflecting growing uncertainty in financial markets. The S&P 500 dropped another 2.7%, taking the index's total loss to over 8% from its February 19 all-time high. The Nasdaq lost nearly 4%, its worst day since 2022. The index has officially entered correction territory after falling more than 10% from its December peak and has shed $1.1 trillion in value as tech meltdown spreads. In the mega cap space, Tesla sank 15%, while Nvidia drove a closely watched gauge of chip makers toward the lowest since April. The Dow Jones Industrial Average lost over 2%. Tech stocks bore the brunt of the market decline, with the sector dropping over 4%. The Magnificent Seven stocks, including Alphabet, Amazon, Meta, and Nvidia, all retreated. Tesla's plunged erased its post-election gain completely as Elon Musk faces backlash over political controversies and company management concerns. HSBC downgraded U.S. stocks, citing uncertainty around tariffs and global trade disruptions. Bitcoin-linked stocks also slumped. Coinbase lost 14.9%, while MicroStrategy dropped 17.1%, tracking weakness in cryptocurrency markets. The OG token crashed below $80,000, down over 4%. The second-ranked token Ether fell more significantly, with losses of over 6%. The sell-off was exacerbated, that is, by a stronger Japanese yen and rising bond yields, which led to the unwinding of high-risk investment in tech and AI-related stocks. Market jitters intensified as U.S.-China trade tensions escalated. China's retaliatory tariffs on select U.S. imports took effect on Monday, while additional U.S. tariffs on base metals are expected later this week. Meanwhile, concerns over a potential U.S. government shutdown added to investor anxiety. Lawmakers are scrambling to pass a spending bill to prevent a fiscal crisis. As the market correction deepens, analysts warn that sustained volatility and political uncertainty could weigh on economic growth in the months ahead. All right, let's talk deeper about all of these issues on the broadcast now. We are being joined by Clisman Barati from London, economist and founder of Pareto Economics. Thank you so much for joining us on WION. So what are the main causes for the fears in the market at this point?
Thank you so much, Susan. The market is really not one entity. That's what we have to understand. They are a mixture of international players, big and small, that transact with each other over a set period of time. Now, what we can say as it relates to recession fears, the one organization that can decide whether the U.S. is in a recession is the National Bureau for Economic Research. That's the body which takes holistic data, not just how the stock market moves, but GDP, employment figures, etc., to build a much broader picture of the health of the U.S. economy. Because there is a divide, Susan. There's the financial economy and there's the real economy. Now, when there's recession fears, typically it's when the financial economy takes a dive, which leads people to believe that this will have an impact on the real economy. Now, the real economy will have its impact felt as Trump's tariffs come into play and the resonance of that, as we'll see. But as it relates to recession fears, that is the body that makes the decision as to whether that happens. But it is surprising to see such big sell-offs across different asset classes during this time.
And do you see the present meltdown bottoming out anytime soon? I mean, we saw Howard Lutnick on Sunday confidently say that there's not going to be a recession. We heard President Trump's, not say whether there will or there won't, but then you have other individuals, very credible individuals, saying we're headed that way. So what's going to happen in the near term?
Well, we shall see. That's the best thing I can say for this, because a downturn in stocks doesn't necessarily mean a recession is on the horizon. That's not what it means at all. Because the same way investors sell stocks, they can buy stocks again. Whereas if we see a dip in unemployment or a gradual slowdown in unemployment, then that has much longer term ramifications, and that takes a much longer time to play out because of what we see impacting that transition, if you like. When we look at the international picture, Suzanne, one thing that Trump's tariffs has had a big impact on is how it's had knock-on effects to other markets. For example, the U.S. makes it more expensive for people to import for companies to export into the United States. That means China doesn't sell too much into the United States. That means they're buying less goods, raw goods, etc., from their trade partners, which has the potential to slow down the economy because the U.S. is such an integral part of the global economy. That's how these things spread out over time, and it's the decision of policymakers and how they see the future of their policies and what impact they would like to have on their own economy that also has, whether you like it or not, impact on the global economy as a whole.
Very interesting. We'll be watching very closely. Thank you so much for that analysis. I'm looking at the president's schedule, President Trump's. It looks like he has a meeting with business leaders, a roundtable office meeting. It looks like they need some reassurances as well. It was a pleasure talking to you. Please do come back.
Thanks, Suzanne.